Good morning. Yesterday was interesting, kind of. It was kind of, well, yesterday's commentary, I thought it would be a consolidation day. It wound up being a trend day. And in part, that was led by tech. I guess there's now, and it was yesterday anyway, a move out of energy and some financials into tech. And Apple got a turnaround. We spoke about possibly a head and shoulders bottom there. Maybe, yesterday was a green day, but on there. So maybe that's the start of it. We'll see. But looking at the S&Ps here, you know, it's kind of confusing. And in that you get patterns that are confusing in of themselves. And of course, we're going to get confused within that time frame, meaning um, big wide range down bar. And, there was this stabilization bar. And then yesterday, I thought maybe it'd be like an inside day as it consolidated, or maybe it would even, move down. But the ideal scenario would have been if it was an inside day to move down today after, 2 days of stabilizing after the big down move. And here, prices retrace, I guess, a little bit more than 50% into the red bar, which puts it in question. And so we look at where the move and this bottoming action that was going on that we spoke about yesterday, and as prices came up to this resistance, in this time frame anyway, they blasted right through it. There was a stall intraday on the smaller time frames that you could see, and this is typical of what happens when prices clear one resistance area. They go to the next one, and that's where they stalled yesterday. So I reiterate what we talk about almost on a daily basis, that you don't need trend lines, fib lines, VWAPs, and other what I call fine tools. Look to the left, because prices move between reference points that we call support and resistance. So as it cleared this one, there was little to nothing to stop it from going up to this one. So once it got there, it started to move the jiggles down. And so overnight it comes down to, this support area, and now it's stabilizing there. And now what happens is you have the reference points getting closer together. So now we've got this high and this low. And so today it leads me to think that, hey, stabilization day, but if it could bottom out here, and V bottoms are less reliable than something that would form like this with a triple type of a bottom, to be able to take this out. The concept is that as prices retest lows, it moves further away from resistance areas. And so now with this V bottom, you can see it's beginning to stall right here, which is it's right about here, from the overnight trading. So wide bar down, not as wide a bar back up. And we'll see where this ends up today. And the weekly chart is still early, but so far just chopping up near the prior high. Okay. This is the hourly chart up here. Exactly. There's the hourly chart, obviously daily chart, weekly chart, 15-minute chart, 5-minute chart. All right, so let's just look at spiders for a sec. And so 391-ish or so, 391. We're going to get a little gap down, but within this range. And it kind of leads back toward just thinking, oh, shoot. Killed e-signal. It does that sometimes. Hold on. Take me a second to get it back up. Actually, it takes more than a second to load e-signal. It's kind of a whatever the pages I have there to load it takes a minute. We're almost there. Okay. So we were going to attempt to look at the spiders. I was going to drag this line up with cheese. I guess there's some bug in there. I have to delete that line. Here we go again. Sorry, folks. I'm not going to touch that line again, Tom. I'm not even going near SPY now. All right. Well, let's leave the lines alone. All right. So the Qs, they gapped up above that high. And, the 50 MA, while subjective as a reference point, it's so widely followed. How could you not look at it? Simple moving average. And you could see where it really stopped in the middle of nowhere there in that 320 area, but the 50 MA was there and trading at 319. So that's up a little bit. And the retracement here from this trading range, right, these highs, now is forming a smaller trading range in this area. It's kind of like, okay, which way is it going to go? It's suggestive of this probably chopping around here as traders kind of figure out which way things are going to go here. You can see the weekly with the topping tail as an opposing bottoming tail. And overall, while yesterday intraday was a trend day, right, it went nowhere as far as the week's range. It was an inside week, and you could see what's going on here as far as the trading range goes. So Qs are up here a little bit. And so looking at the overnight information, you see the drop down here, and the retracement is more than 50%. On a closing basis, eyeballing it, looks like about 75%, but stopped at the 50 MA and this little area there and pulled back. And so the depth of that retracement at this point neutralizes this big bar, but we've got this trading range, and it's just a mess. The weekly chart's still somewhat supportive of, I guess, going either way, but you've got this break under these lows, bottoming tail, topping tail, inside week. They're going to have to wait a few days here and see how things shape up one way or the other. In this market, who knows, this could go right back down again. But the longer it spends time up here, the more supportive it is of, I comment yesterday, basically around Apple, but we could apply it here to this potentially being a head and shoulders type of a bottom. So if it spends a couple of days here, it begins to suggest that it can take out this high. So it needs a little work to do here, right, to kind of bring that bias historically into alignment with a chart pattern that supports it. The Russell was unloved for the most part yesterday. Right? And you can see this was more like the type of a pattern that begins to evolve after a pullback like this and that drop. Right. So Jake's telling me energy is moving down. Oil is actually up a little bit, but XLE is going down. So, biotechs were up, but financials were down yesterday. So usually with the Russell, if you've got biotech and financials that are weak, this will be going lower, and because energy somewhat plays into that. So we can see, they're continuing to be weak here, and there isn't much to stop them from going lower. This big topping pattern and all these little pivots over here, it is nothing definitive other than, to really look at this pivot, which really sticks out as a significant reference point versus these little jiggles as it went up there now that it broke this. So I would look at this as being a downside target. And bonds, stabilizing there, that they're down on support. That's the 30-year. There's the 10-year. It's on the top of support. We covered this yesterday. This potentially going down into that area in alignment with the 10-year going up in toward 2%. So far at the moment, it looks like it's retracing a little bit. And, with this gap down, this pattern that jumps out at me here is these highs are kind of close together, and then an expansion bar that closes near the high, and then it gaps down. So you want to, this as far as that idea, we're always putting pieces of the puzzle together to get, better odds as to a pattern. So this is something that has been bothering the equity markets, for a better word, with interest rates going up and the inflation thing. So this kind of a breakout range expansion bar, if prices were to trade under it, I think that's going to give a lot of ease to tensions of interest rates going up. So something to keep an eye on, not even the eye, set an alert at the bottom of that bar. If this starts coming down, that it could be supportive of the equity markets actually maybe moving out of this sloppy range that they're in. All right, oil, just stabilizing. That was a nasty down day. And gold down again. Actually, starting to drop here within this little range here. Was hoping for a retest of this pattern and a reversal. Sideways here, so waiting. Silver. I don't have the news on. I don't know what got this. Somebody maybe said something that's we usually think when we see prices drop so abruptly like that. SPX levels for tomorrow. Well, looking at the quotes. Support and resistance. Well, I would say above 39.80, resistance, and we don't know where today will end, but below here, and 38.50. Well, I think we talked about this yesterday. I think 38.50 is a relatively safe level. And we don't know where today will end, but now that you got this turnaround, it's got to go through yesterday's low. It's got to go through Friday's low. It's got to go through the 50 MA. So you've got three soldiers, so to speak, on your front line to protect you. So, and that, being a good number, I think that that's a good level, to trade against. Sure. All right. And interesting, the VIX just fell yesterday. And just the more things we look at, I mean, you can tell the more things that I look at, the more confusing the charts are. Right. It's easy when things are trending in one direction in multiple time frames. Right. What is there to argue with? But when you start getting patterns where prices, come down as they did, and then kind of go back up, especially as they relate to the Nasdaq. When you get into trading ranges, it's like, hey, which way are we going today? So there you have it. The transports, they've been holding up terrifically, and so they gapped up and still in an uptrend. Came in yesterday, really not a big deal, but that's it. All yours, Dan.
Good morning. Yeah, there's not too many earnings here, but still a number of couple gappers we can look at. Our opens look fine. So just tell me if you have a question on anything. FITB. Steve, you have to tell me what you're looking at because I have no idea. Nothing's jumping out at me there. Yeah, Netflix. Yeah, Netflix got an upgrade. It was on our list yesterday, remember? It's just power bars out of the open yesterday. And we said we were going to wait for the close. And now it's gapping up. Yeah, no, that's a definite day trade long idea. Maybe even swing. I mean, I could see 540, 545 if there's a price void here. Yeah, so I do like Netflix, put spread, day trade, possible swing trade. EHTH. Yeah, but our entry though, McGraw, was yesterday. A small little buy setup, bull flag, gap reversal. That would have been a no-brainer entry yesterday. Bull 1, 2, 3 on the weekly. So now it's gapping up to 70, gapping up another 2 to, you just missed the ideal entry is all, but stop yesterday's low. Thomas TRQ. Can't tell where it's gapping, but it's been an uptrend. QS, yeah, QS was on my long watch list. Reverse head and shoulders looking thing, flat MAs. And now I think it's having a secondary offering of some sort, and that's getting whacked, 60 bucks. So there's absolutely no trade right now in it. So P, Amgen, XLP was a nice gap reversal, but it's had a big run. I'd prefer if you'd get 1 or 2 inside days. Amgen, it's up 6 bars, but that's, 15-minute chart is bullish. NVIDIA, Gevo. NVIDIA is the meth. I mean, it's just not compelling. We have a price void on the 15, so under the pre-market low, it looks like a day trade short, but that's just neutral. I don't trade neutral charts. I need something more bullish to me to risk our money. Evo. It was a 1, 2, 3, but now it's gapping down. But just a yesterday's low is fine because it's still in the upper part of Friday's low. So if it can recover from the gap down and take out yesterday's high, then yeah, that looks fine. Sure. Michael Texan broke out of a 3-month range. Yeah, but it's not a quality breakout. It is a breakout, but it's a very, very sloppy one. We like them tighter with support closer. John, Microsoft. Yeah, that thing was on fire yesterday too. We have a 240 call spread that we're holding our breath for Friday. And remember, we got Yellen and Powell testifying today, or whatever they're doing with Congress, and they already have some prepared remarks, which I'm sure explains part of the pre-market jiggles with oil and silver. You know, those are commodities. Let's look at some of my gappers here. I just saw a little GNUS busting a move. Let's say this gap's not too big, so I like this one. So let's watch that. I put it on another chart, another computer. VIAC. This thing's been on fire. It's not a great short setup because it's the last week. It's been building a higher range base, but it's a bearish gap. So let's keep an eye on that for maybe a call spread or day trade shorts. CMCSA. Irfan, your drop down. It's a sloppy buy setup. Sloppy. It came in with gaps and it is reversing on support at the 20. I see it up here pre-market, so it could be okay. I'd just start with a day trade and then play it by ear for a swing. Irfan's asking me about these three. Irfan, you're asking me about swing long. Your swing long on Mighty Mo was this gap breakout right here on March 8th. It's now up 20 days in a row, far from the 20. There's absolutely zero swing, low risk swing setup here, unless you're just playing a continuation. For a day trade, that's fine. It's holding well pre-market. Merck has a gap reversal, gapping down it's sloppy. These topping tails were kind of breakouts rejected. PFE is better. PFE is better because it closed. It closed over last week's high. So this one is superior to Merck. Gapping down here a little bit, which is fine. So if it takes out yesterday's high, Irfan, this is the best of those three. And I saw IWM getting whacked this morning, and it totally looked like it wanted to do this 1, 2, 3 continuation down a measured move down that we talked about. This little dolphin blasted here. So this was a 1, 2, 3, but the gap's too big on this one. I mean, look at that. Went from $6 to 15 in one 15-minute bar. Netflix, yeah, we talked about. I like that one. Coop, recent IPO, very sloppy, but I mean, these are some big ranges. I mean, think about this. That's 6 to, I mean, that's 40% range in one day. That is crazy volatility. FREQ. So this is just a poster child of why we don't like to trade biotechs, particularly those that only have 1 or 2 drugs. You know, it's a one-trick pony. Look at this, closed at $36 and now 10. Yeah, Rancho dunking never hit for us because it never took out the 5-minute high, but I know a number of you did enter it early, nevertheless. And I said it's fine, just keep the same stop. Keep the same stop. Thomas and Jose, I don't know if your mic was off, but I just spoke about those. I spoke about Genus and Pfizer. Pfizer, I said over the high, I like. Genus, I said I like the gap. It's on, I have it on a 5-minute bar, and I'm watching it at the market open, but yeah, they're both good setups. Uzi, ATH. Vuzi is a 1-2-3, but it's far from the 20. And we don't trade 1-2-3s far from the 20. ATH. That's a wide range bar with a price void. I'd like a 1-2-3 better if you got it. If you can get an inside bar here, then on then tomorrow you buy over the highs. So Rancho, I see your question mark. Dunking is fine. Just keep the stop, the original stop. IQ, PM, CNC. IQ is gapping down. We still have either a third or a half lot in trail mode. And so we will just, move stop 15-minute low, 15 or 30. I have it in a window. I'll watch it. PM, that's another marijuana. It is a breakout I see on the monthly. Monthly I like as a long-term bottom. So I don't know, when you all give us a symbol, I don't know what you're thinking. So I'm just having to guess. It's not a great swing entry. It's a mess. But if you're trading it off the monthly, then it looks good. Just give it a big stop. CNC. It did break out. Maybe 30-minute high. Again, I'm not pushing things. I'm looking for tier 1 setups. Oh, this run, bottom right. This is a tier 1 setup. So you got the rising 200, you got a nice 180 higher low reversal. We got a gap over yesterday's high. And so I already posted this as a 30-minute high. I'm not going to rush into it. I have it bottom right. Let's see what it does. But this is a beautiful entry if this gap holds. It's slop. It's same thing. It's at the prior high. AMAT, it's trading range. It's slop.